Hello and welcome to Perfect Storm. We're here to give you another great show. I hope you enjoy this. Today we've got a real contrast. We have the thing that I like to talk about first is what politicians rarely discuss. And in this case, it's a giant contradiction. And who would that be from? Of course, President Obama. Very easy. It's very big in the news right now that the president is holding or hosting a multi-nation African summit. I believe there's 50 countries in attendance, something along those lines, in Washington, D.C. I think it's a 2-day meetings. And he's talking about all the investment that's going to be pledged by United States companies in African countries. And so this is in complete contrast and complete contradiction to what President Obama said during the campaign trail when he was running for re-election against Romney in 2012. So what we found was a little presentation that Mr. Obama spent a lot of time in Ohio talking to Ohio voters, because there's nobody in Africa voting for Obama, only in places like Ohio. So in this case, it was good to talk about his opponent as being for American jobs, for Ohio jobs, for Hamilton County jobs. So listen to President Obama, 2012.
I have not found any serious economic study that says Governor Romney's economic plan would actually create jobs until today. I've got to be honest. Today, we found out there's a new study out by nonpartisan economists that says Governor Romney's economic plan would in fact create 800,000 jobs. There's only one problem. The jobs wouldn't be in America. They would not be in America. They'd be in other countries. By eliminating taxes on corporations' foreign income, Governor Romney's plan would actually encourage companies to shift more of their operations to foreign tax havens, creating 800,000 jobs in those other countries. Now, this shouldn't be a surprise, because Governor Romney's experience has been investing in what were called pioneers of the business of outsourcing. Now he wants to give more tax breaks to companies that are shipping jobs overseas. So I want everybody to understand, Ohio, I've got a different theory. We don't need a president who plans to ship more jobs overseas, or wants to give more tax breaks to companies that are shipping jobs overseas. I want to give tax breaks to companies that are investing right here in Ohio, that are investing in Cincinnati, that are investing in Hamilton County. I want to give incentives to companies that are investing in you, the American people, to create American jobs, making American goods that we're selling around the world, stamped with 3 proud words, made in America. That's why.
So there we heard it from the chief, Commander-in-Chief of the United States of America, President Barack Hussein Obama, and he managed to explain how he was going to get votes from Ohio by pretending to be for American jobs until today and yesterday. And here's a quote from President Obama. "We've got to do better, much better," he said during closing remarks at a day-long session that brought together U.S. and African politicians and business leaders. "I want Africans buying more American products, and I want Americans buying more African products." Guess what? The only way that can happen is for businesses to set up business in foreign countries. There's no difference. There's no escaping trade. Trade is a good thing, but it isn't that you get to decide, Mr. Obama, or anybody else, where it's going to be done. If you're IBM, which are one of the companies who was mentioned in this story, in this African summit that took place in Washington, D.C., it said that there were a number of companies. It named General Electric, it named IBM, it named Coca-Cola, it named MasterCard. Those are some of the larger name companies who are setting up business in African nations. Now, you know, Africa is just a continent, right? There are a whole bunch of different countries there. Do you think that MasterCard and Coca-Cola and General Electric aren't already doing business over there? This isn't like they're just setting up because Obama put together the Summit for African Nations. They're all around the world. IBM will sell computers and software and services to anybody in the world that wants to buy it. And Coca-Cola will sell you Coca-Cola, an easy product for us to understand, a consumer product like that, all around the world. Any place that they can sell it. But guess what? Everything that they sell in those foreign countries, they have to pay the tax in that country. There's no escaping that. So there's nothing new that happened in this African summit, but it's a complete contradiction to what he was espousing at that Ohio stump speech in front of those people apparently in Cincinnati. I think that's where he was talking. He mentioned Hamilton County, and I'm pretty sure that's the county that encompasses the big city of Cincinnati. And we know how long he campaigned there. So that's complete campaign rhetoric that has no response from anybody. There's nobody out there today talking about what he has said about Africa as if this is some new idea. Take a company, I was looking at a company the other day, I think I mentioned it before, that builds offshore drilling rigs. You sell those, or you rent those drilling rigs, or you sell those drilling rigs to oil companies anywhere in the world that they want to put them. Well, guess how big the ocean is? The ocean is a big thing, right? It's about 70% of the Earth's surface is ocean. And there's a lot of oil under the surface of the ocean, under the floor of the ocean. And so you sell your ocean-going product, your drilling rig, to countries, to companies, wherever they need to drill it. So then you pay a tax when you sell them that drilling rig wherever it's sold. Is it their fault that they're selling their products around the world? Of course not. Of course not. So what I'm saying is this is just poppycock to be sitting around talking as if he's now all for this because it's African, because they're African nations. Believe me, any country in the world doesn't really care where they do business. They do business where they think that there's a demand for their product. And they compete. And also nations compete. This is the overall huge message that I should bring to you, if anything, to add some value and make Perfect Storm different, is that the difference is that the United States is competing for the employment of people, for people to do business with every nation in the world. It doesn't matter if it's some little country like Ghana or Guyana or any of these places, Paraguay. I don't care where it is. The United States is competing. And the only way that you can draft more business into America is not with political stump speech rhetoric, like we've heard, or not with this African summit that the president just hosted. It's with making it more attractive for capital to come to the United States. And you do that with lower corporate tax rates. It doesn't mean that businesses, American companies, still won't do business overseas. Because when they do business overseas, and IBM sells their computers or their software and that type of thing, and Coke sells their Coke, and MasterCard runs their credit cards over there for businesses over there, they have to pay taxes in each country. Can you imagine somebody like IBM, somebody like Coca-Cola? I bet you, I don't know the exact statistic, but they could easily be already in 150 countries around the world. That means they're filing 150 different tax returns. They have to pay taxes in every one of those countries. As a matter of fact, I was on a conference call recently with this large offshore drilling rig company who was discussing openly with the analysts on their conference call, on their quarterly conference call that they speak to investment analysts all the time, and they're saying, we're trying to find a way to be able to bring more of our foreign profits that we've sold overseas products overseas. They're trying to bring some of those profits back in the United States at the least cost possible. When you run a business, you don't try to maximize costs. You try to minimize costs, of course. Who in their right mind would maximize cost? So every dollar you bring into the country that you've already paid tax on in Brazil when you sold them all these drilling rigs is going to be taxed at 34%. Who in their right mind would bring the money back in the United States and get hit for 34%? That means you only have 66% of it left. You're not going to do that. No one is going to do that in their right mind. So the solution to this is for America to be the tax haven. America should be attracting money to the United States. Number one, we have the biggest consumer market in the world, bar none. Number two, we have plenty of technology know-how, plenty of educational resources, plenty of everything in the United States, and make the United States a tax haven. That would be the solution. Why not be the lowest corporate tax in the world? I believe somewhere, I think Ireland might be the lowest, somewhere around 12.5% at last time. Why not make it 12% instead of 34%? And this whole thing is over with. This money comes pouring back in. Because, once again, these very companies that he's talking about that are going to invest, I believe it was $14 billion in various African nations, well, they just didn't wake up yesterday and decide to do that. The president's trying to take credit for our companies doing business overseas. Like I say, MasterCard and so forth, all these companies will set up and do business anywhere they possibly can. I can tell you somebody from General Electric was interviewed yesterday talking about this African summit. And one of the first things out of his mouth, this guy was president of General Electric in the continent of Africa. So he knows all the nations there. He knows the necessary people. They have all sorts of General Electric operations over there already. Are they going to expand? Yes. Are they participating in the summit? Of course they're participating in the summit. But they're already there in Africa. He said, you know what Africa needs? It needs more power. It doesn't have sufficient power, electricity, to power the growth that General Electric needs. Now, General Electric can produce power for them. They can build power plants. They can do all those types of things. But once again, nobody can really do anything without money, without investment, without profit. It's the profits that drive all of these things. So if there aren't enough gigawatts of power, none of this is going to happen. Well, guess where that power is going to come from? It's going to come primarily from coal over there because of some of those major dams and stuff. There's already hydroelectric power from these giant waterfalls and so forth that they can generate power from. It's going to come from natural gas. It's not going to come from African wind. There's not enough African wind to generate the power that they need. But I thought it was interesting that, that's part of the infrastructure that in more third world countries need more electricity. Now, we were hearing all about the terrible things of China. Well, why do you think all the investment has taken place in China? It's the same thing. It's taken place in China because it's a growing economy. And apparently there's lots of countries in Africa. I think they named, three of the fastest growing economies in the world are in Africa. I don't know which exact countries they were by name. It doesn't really make any difference for the discussion I'm having here. But I just think this is incredible that all of a sudden our companies, U.S. companies, should be investing in foreign nations because this is important for trade, because Obama says that I want Africans buying more American products. Well, they're not going to have more American products to buy unless they make money in Africa, unless they have more people working. So can you have it both ways? Of course you can, but you have it with as much free trade as you possibly can. Instead of prohibiting trade, you open up trade, and that's by reducing tariffs. You stop charging people so much money to bring their products into America. And he says, I want Americans buying more African products. Well, they're going to have to produce more African products, aren't they? And how are they going to produce it? I guess that's going to generate jobs over in Africa. Oops. I guess we don't have to have that now because he's not running for re-election this time. It's not 2012. So I just find it ironic. And I was also trying to research before I came to the show today. Now the number is $33 billion. So, of course, I'm thinking the first thing, if there's a difference between 14 and 33, that would be about $19 billion. That's probably going to be our money. That's probably going to be U.S. money that's going to be given to businesses to do business over in Africa. It's almost without a doubt. I didn't exactly document that other $19 billion, but yesterday the talk was $14 billion all over the news. Today it was $33 billion. Well, I'm sure that's the United States opening up its wallet, which is totally counterproductive. I don't, it's one of those things. It's kind of like Solyndra and the phony solar cell business that was supposed to create all these jobs, and all we did was lose $500 million. So anyway, that's what I wanted to cover for the first topic today. The second one that I want to talk about before we talk about the stock market, that's a little bit of a follow-up on the interview that we had a few weeks ago with Harvey Rosenblum, the former Dallas Fed economist. I did a little bit more digging, and we're going to put together some clips in future shows to narrow down this interview so that we can talk about little segments of it in little pieces. And then it's something that I can address. What it is kind of some of the things that I missed the opportunity to ask Harvey about that we can discuss. But if you missed that interview, you can go to LoneStarTeaParty.us and see it on there. It has his name as part of the caption, the interview with Harvey Rosenblum, and you can listen to the whole, I think, 50 minutes approximately that we had with him. But it was a pretty good interview, and it gave us a direct voice from the Fed, someone who worked there for most of his career. Now he's a full-time professor at SMU teaching economics. But I wanted to say a little bit more about this housing crisis, because that's really what I was discussing with him in that interview. There was a committee, a congressional committee that was created called the Financial Crisis Inquiry Commission, FCIC for short. Always the government has to have acronyms for everything. The Financial Crisis Inquiry Committee was set up with, I believe, 10 members. There were 6 Democrats and 4 Republicans on this committee. But I did a little bit of checking into this. This was supposed to the purpose of this committee was to understand what went wrong. How did we get this huge financial crisis that we're still lingering from 2008? It's now 6 years later. And I was talking about the cause and trying to bring up possibilities for the cause with Harvey Rosenblum in this interview. But I found something else very interesting. This Financial Crisis Inquiry Commission was set out to find the cause of this tremendous financial crisis. But the Congress passed the bill, the Dodd-Frank bill, and the President Obama signed it before the FCIC finished their investigation. So they didn't even care about what this commission was going to come up with as to the cause, which means that was all a phony, false political stunt. And if you want to learn more about it, go on the internet and look up a guy by the name of Peter Wallison. Peter Wallison was part of this committee. He is the only one who wrote a dissenting opinion like the Supreme Court does, where he was in the minority. Some incredible things that he brings forth in this. So the fact that was passed by Congress and signed by the President into law, this supposed remedy, this Dodd-Frank bill, even Harvey Rosenblum mentioned in the interview towards the end that it really didn't do anything to address the problem, and one of the problems is too big to fail. Barney Franks and former Senator of Connecticut Dodd's bill didn't do anything about too big to fail. The other thing that I wanted to mention in reading some of the work by Peter Wallison, he makes mention of the fact that there was a add-on in the 111th Congress when it was still under Democratic control to introduce a bill that was going to include more financial institutions into the same conundrum of this Community Reinvestment Act that really is the legislation that was behind this crisis, the creating of this crisis, and gave all this easy money away. Of course, when the Democrats lost the House to the Republican leadership, that bill went into the garbage can. It doesn't mean that it's gone forever. We'll probably see it raise itself again from the dead. The other point that Mr. Wallace had mentioned, and by the way, I believe he was an assistant secretary of Treasury under Bush, so he has worked for the government in the past. He works for American Enterprise Institute now, which is a conservative think tank. But he made mention that one of the issues, the reason why he wrote the dissenting opinion to the majority's conclusion on this commission that he was on, was that he said the commission's majority erred in assuming that it already knew the causes of the financial crisis before they conducted their investigation. So they already had a cause, and now they brought witnesses and so forth to kind of formulate around the cause. And so again, it wasn't even serious about it. He said he couldn't get any witnesses that he thought would add some value. He couldn't get them because he was in the minority. He couldn't get them to be asked questions and be part of the process. So again, that was purely politics. And of course, that's the problem when you have more political intervention in the economy, then you have more chance for these kind of financial crises, because their purpose is something other than a free market system where people are literally competing with one another. And that's really what brings this whole thing down. And I just want to make this one point, that this crisis is not over, even though we're 6 years into this. And when I wrap up today and talk about the stock market, instead of giving you just my opinion today, I'm bringing one of my favorite authors, Jim Rickards, a few of his words in so that you can hear exactly how he's looking at the situation today. He's the one that wrote the book about currency wars that I've talked about in previous shows, and he has a new book out that talks about kind of the end game of this and what likely could happen. And it isn't really very good. It isn't really very good news. So as you know, I'm going to move on to the third segment now and wrap it up with this. Talking about the stock market almost every single time that I've talked about it on this show, which is what I do for a living at Las Colinas Capital Management, I've said to the listeners, to the viewers, to pay attention to owning some silver, some gold in your portfolio of investment, because the dollar is headed for a much weaker value, and so your dollars in some places now, even in Europe, they've introduced the idea of charging you interest for having your money in a bank. That's called a negative interest rate. Who cares what it's called? Who would keep their money in a bank? So it's things like that. If that starts to proliferate, and that starts to become more popular, they'll create their own runs on banks, because who's going to leave their money in there and be paying money to the bank for it sitting there? They'd rather have it in their mattress. So there's all sorts of crazy things that could happen yet. And then one last thing to lead into the stock market that I should mention is the one thing that Harvey Rosenblum did say towards the end of that interview was he said the system is still over-leveraged. Still over-leveraged. This is 6 years into this crisis. Still over-leveraged. And of course, I threw up that chart that was showing that we're at an all-time high for the total amount of debt in the United States relative to the size of our economy as measured by GDP, a gross domestic product. And that chart, to me, is something that you should etch in your mind. You should go to LoneStarTeaParty.us, and it's the second chart that we bring up in the interview. Just fast forward it. There it is. We got it up there now. Just fast forward it. When you go to Lone Star Tea Party, you can get this very chart. Look how high the amount of debt is relative to all the way back of U.S. history, all the way back to 1870. All the way to 1870. The only other spike that you see there is the 1930 Depression. The 1930s, and it goes into the 1940s, is where that's starting to come down on the other side. That huge spike in debt. And now look where we are today. Where we are today is that over 300% of GDP is in total debt, and that's way above even the peak of the Depression. And I will just say this one more time to you. We haven't seen the right side of that chart. We haven't seen the decline of that debt. And the decline of debt as a percentage of GDP, to bring that graph down to a normal level, means a lot more pain for people in our economy. And I'm talking about just the United States of America. So let me just finish in the last few minutes here with a few words from Jim Rickards. It's Rick, R-I-C-K, A-R-D-S. Jim Rickard is, I think, a really great guy. I think he's very good at explaining things. But this is his commentary about the financial news people that are talking today. So he's talking about CNBC, Bloomberg News, any of these news shows that talk about the financial markets. Listening to mainstream market commentary on television and reading the financial press leaves one with the impression that the economic recovery is gaining strength and that the stock market indices at or near all-time highs will go higher still. The litany of market happy talk is impressive. The unemployment rate has dropped to 6.1%, down 4 percentage points from its peak, and it's expected to go lower in the months ahead. The economy created about 230,000 jobs per month in the first half of 2014, which brings the increase in jobs to 9 million since the economic recovery began in mid-2009. Interest rates remain low, which supports high asset valuations in stocks and housing. Inflation is tame, and expectations about future inflation are well anchored. To hear the stock market bulls tell the story, all is right with the world. But all is not right. In fact, the fundamentals of the U.S. economy are in awful condition and are getting worse. Almost everything about the happy talk story is superficial and falls apart under scrutiny. There is an alternative narrative of bad news that is seldom discussed on mainstream business channels, but it is well known to analysts. When these adverse trends are taken into account, one conclusion is inescapable. The stock market and economic fundamentals are on a collision course. One or the other will have to swerve. Either the economy will have to improve rapidly and unexpectedly. The economy will have to improve rapidly and unexpectedly and reverse its fundamental weakness, or inflated stock values are heading for a precipitous fall. The evidence suggests that the latter is more likely. One more thing from Mark Faber, who's a Swiss-born, interesting guy. He's been in the business for a long time, a very credible person. He said, I see the global economy weakening. Now he's talking about the whole global economy, not just the U.S., as Rickards was discussing. Very briefly, listen to this. When I travel and look around at economies, I don't see the global economy strengthening. I see it weakening. In Asia, we don't have a recession per se. It is just economic growth has slowed down meaningfully, or there is no growth at all. We are now in the 5th year of an economic recovery, which began in June of 2009 in the U.S., and we're more than in the 5th year of a bull market that began on March 6th of 2009. So now he's talking about the stock market. This is a very mature economic recovery. It would seem to me that the monetary policies that central banks pursue are negative for economic growth, but they are positive for asset price increases. As a result of asset price increases, lots of goods have become unaffordable for the typical household. There you go, rising prices. And this is the kind of thing that starts to work against the overall economy. Both of these guys are people I respect. Like I say, one is Mark Faber. You can look him up on YouTube. He does a lot of interviewing. Jim Rickards is the other. He does a lot of interviewing. You can put his name in Jim Rickards on YouTube and find it immediately. Won't take any time at all. I was going to say, introducing next week's show, I'm anticipating having on a journalist from Breitbart that writes about Texas, because Breitbart has a really good website, as many of you probably know, but they do have a page dedicated called Breitbart Texas. And so they're covering what's happening in the state of Texas. I did a little pre-interview with this writer, Meryl Hope, and I hope to have her on next Wednesday for next Wednesday's Perfect Storm show. And also look forward to us having maybe a few call-ins. I'm going to try to get a few mayors. I don't think it'll be too difficult to call in and discuss that U.S. Conference of Mayors that took place in Dallas in June. That's the one I was talking about before that had so many resolutions that seemed to be pretty much the central planners in Washington trying to control our individual cities. So until next time, we'll speak to you and visit with you next Wednesday. Thanks for watching.